my channel. Pow, 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 pow. Hey, so today's topic is going to be about financial literacy. It's about that money, man, that money. So financial literacy is the skill and knowledge to be able to make sound financial decisions. Unfortunately, that is not something that is taught to us in depth while we are under the age of 18. And I do feel like, it could be beneficial to have a financial literacy class as a senior, because once you graduate, you are entering adulthood. And as an adult, you will always have to make financial decisions, whether it's paying bills, whether it's submitting credit card applications, whether it's opening an account. You have to make financial decisions. So financial literacy is a very important topic that I feel like sometimes is skipped over. I do want to say that I am not a financial expert. I'm not a credit expert. However, I have worked in the financial industry for 17 plus years. I have worked for both banks and credit unions, so I do know a little bit of what I'm talking about. And if I could pass on knowledge that has been given to me and it helps one or two people, that's all right with me, because I love you guys. Yay! And I want everybody to be successful. Okay, so let's jump right into it. So the time that we turn 18, we are eligible to open a sole owner checking account or savings account at a financial institution. So when we do decide that we want to open that account, we have to make a decision if we're going with a bank or if we're going with a credit union. Some people elect to do both. Some don't know the difference of why should I choose a credit union over a bank or vice versa. Why should I choose a bank over a credit union? So let me tell you the difference. Credit unions are not-for-profit, meaning they don't solely depend on interest collected off of loans in order to survive. They depend on their shareholders. And with that being said, they are able to typically offer lower interest rates on credit cards, auto loans, mortgages, things of that nature. And they are able to do also relationship lending. Relationship lending is saying, hey, you have become a member of my financial institution. You have maintained your account, you have it in good standing, and you have been loyal to us. So even if you've had a couple hiccups on the credit, we're still going to choose to give you a second chance and approve your loan. So that is relationship lending. Banks are the total opposite. Banks are credit-based lending, and credit-based lending means what it is. It strictly goes off of your credit. So if you have fair, good, excellent credit, your loan will be approved. Unfortunately, if you have poor credit, then you'll be declined. Banks are for profit, so they depend off of the interest collected off loans. And in most cases, the interest on loans that you get from banks are normally higher. So those that's primarily the difference between the two. So just keep that in mind whenever you make a decision, or if you already are banking with a bank and want to convert over to a credit union, or if you are with a credit union and want to convert over to the bank, then those are the primary differences. All right, so let's move into credit, because that is also an important topic that I feel like we don't talk about a lot. So credit is very important. From the time we turn 18 and we do our first application, when we write our name and social on that paperwork, credit is established and they begin reporting to the 3 credit bureaus, which is TransUnion, Equifax, and Experian. Those 3 credit bureaus give us what we call a FICO score. The FICO score is a numeric number attached to the social that basically shows our credit worthiness. So the higher the score, meaning you've maintained your credit well, you've kept your obligations, paid the bill on time, you haven't exceeded the credit limit, you don't have high balances on revolving lines, things like that. The lower the score means that you may have been delinquent once or twice, you may have exceeded the credit limit. All those are things that negatively impact the credit. So we want to try to stay away from those. Now, I can say, unfortunately, things happen in life that is out of our control. So if you have had hiccups on the credit and you want to reestablish, you still have the opportunity to do so. So I personally had to rebuild my credit, and I did it on my own. I didn't have to pay an outside company or anything like that. So reestablish your credit. I'm just going to give you the method that I took, and hopefully, like I said, this could help somebody along the way. When I reestablished my credit, the first thing I looked for was a secured credit card. Now, this particular credit card I'm not saying that everyone will be approved, but every client that I have referred, and like I said, from personal knowledge, they do have a higher approval rate on applicants. It is the Capital One Secured MasterCard. Secured card means you just put your money up front, and that's the credit limit that you'll have on the card. Right now, Capital One has a $200, and that's the minimum deposit. I'm not sure the maximum, but you can secure $200, and they'll give you a $200 credit limit for you to begin using to reestablish your credit. Now, doing the application being approved is not going to help you. You have to utilize the card in order for it to begin reporting to the credit bureaus. So I would suggest using it for something small like gas and fast food, something you already have the liquid funds to pay for, so that when the bill comes due, you can either pay it off in full or at least meet your minimum payment. Now, they do say that you need 3 revolving lines of credit in order to move your credit score quickly. So once you establish that Capital One credit card, the next card that I chose to apply for, which again, the approval rate is higher than most, is the Premier Bank card. Now, back when I applied for that card had an annual fee attached to it. I'm not certain if that annual fee is still there, the amount. That's going to be a little homework for you to do. But the Premier Bank card, again, is a secured card that will give you the credit limit on whatever funds you put up to secure. The same thing. You need to use that card in order for them to begin reporting to the credit bureaus. Last but not least, because we do need those 3 revolving lines, you could do a retail store card. I did Cons. Cons is an appliance store where I was able to go in, establish a credit line. I purchased something very small, which was my desktop computer, something that I already had in mind to buy, and I had the funds for, and I just made timely payments. After 1 year of having all those 3 revolving lines, utilizing it, paying the bill on time, I was able to get my credit score over 700. It had dropped as low as the beginning 600. So it went up well over 100 points. So there is ways to reestablish credit if you have had some bumps in the road. So don't think it's the end of the world. I hope that this was very informative for you. If you have any questions, any advice, please comment down below. And I'm also going to put the links below for those credit cards in case you want to go ahead and submit applications for them. But until next time,